every day for that girl he sent my way. This thing is so annoying. You sweet baby Jesus. $22,740. Mm, that will be 147, 46 point, 140 points. Okay. And I thank God every day for that girl he sent my way. will be my thoughts right now and what I want to see in price. Um, at 9:30 when the market opens, I want to see a run on this buy side liquidity, and after that, I would like to see if we want to take this relatively equal lows. This is London low and a this current low down here. So that will be something that I would like to trade to. After that, if it wants to get down here and down to this inefficiency and down to the new weak opening gap, will be ideal. So that will be my ideal scenario to trade today. Because after tomorrow, the conditions in the market will not be the best to trade. Well, after Wednesday afternoon, because this is a um, non-farm payroll week. So let's see if it wants to do an attempt to run up here quick, take the buy side liquidity, and then do an attempt to go down to this and to the Asian session low, which it's right around the 50% of the opening range gap. I just eyeballing it, so that could be a good target. So that pair with the first percent to fair value gap will be an amazing trade, and probably what I will do for the week. I'll still be in here reading price, but not pushing buttons, even if the setup makes sense. Or the market could just start running towards my direction. I gotta clean my glasses. They're filthy. Jesus Christ. Inversion for value gap here. So would that be a catalyst for price not to run up here? Possibly. It all depends on what the market does. If it makes sense, I take. If it doesn't make sense, I'll let it run without me. So there we have the opening. We took the low. We took about to take London low. Another scenario that could happen, it will be for me to those that liquidity below the market to be taken. Then the market showing me signatures that it wants to go up to those relatively equal highs. That would be a trade that I would take too. But there's more confluences to the downside for me to take a trade than to the upside. So I'm just gonna play as it goes. We took that low. Now we still have relatively equal lows. Let's check this wick out. If it's gonna go up to the buy side, I don't want to see it close below the 50% of this wick. We trade it to it. Wicks can do the damage and trade outside of it. We took the London low. Mind you, it can still do what I outlined. It can still go up there after the first percentile for value gap, and this is just the Judo swing to entice people to trade lower, or it can just run. But we have a huge opening range gap. I'm talking about opening range gap. Let me outline it. It would be Jesus. It would be this opening price here. So we have the first percentage fair value gap. Almost. That candle here has to close. But let me style. Let me use another color. I'll use this one or this one. And I'll extend it to the right. Boom. Let me outline the midpoint. So that's officially the first percent of a rally gap. Immediately, I'm thinking about a trading back into it and taking Asian session low. And I actually think that would be a good trade. Trading here and then trading to the new week opening gap. I don't want to see, I don't want to see you go up above it because you already have the wick. This is a balanced pressure for me personally. We have this. We taken this liquidity here. We left relatively equal highs, but it doesn't always have to be traded too. So I think that will be a catalyst for price. Or I can just wait for it to go down here, then trade up and use the 1% of fair value gap as my target. There's a lot of ways on how you can frame um, this video raise. We are approaching the midpoint that, like I said, it was almost overlapping the 50% of the Asian station low. Then a limit order here, sell, stop loss over this. So that's a sell there. Take profit will be I'll use this down here, the new day opening up or the Asian session range. I'll do a partial here, but my take profit will be out there. Now I do not want to see it close above that, and first profit for first partial will be down here. By 5. Let's see. But if it stopped me out, I can just go the other way, go long, taking the first percent of fair value gap as an inversion for value gap, and then go to this relatively equal highs. But it got really close to this. This is a confluence that I would want to see price wanting to go down there with speed. But you see we close above the consequent encouragement of this, so I might get stopped out. But if I do, no worries. If it's still in play, but yeah, if it's really going where I want it to go, I do not want to see it trade above the 50% of the wick, and we just balance the wick. So can it still go where I want it to go? Of course. But it's just something to keep in mind. Knowing the probabilities are in your favor. Okay. I want to see it close below this inefficiency there. I don't want to see it being respected. I want the bullish PD raise to fail. And it looks like it's respecting it. That's not good for me. It's okay. That's good delivery there. Let's measure this wick real quick. Boom. We trade to the 50% and now we're trading up. I do not want to see price just going sideways on this inefficiency. I want to see willingness for it to repel from it. Like that. And once we take this low here, I want to see speed. Oh, we got to the 50% and respect that. I don't like that. Again, the 50% is rejecting it. Okay, that's what I want to see. Exactly. Not yes. That's what I'm talking about. Okay. There we go. Go to my limit order. Yes. No. Reducing risk. We took that one low. I put my stop loss. The consequent encouragement. So, do we want to go down here? That's a lot. That is a lot, but I don't require all that. I do not require all that. I'm gonna put my stop at break even. I'm gonna allow a little bit of range for a wick into the first percent of fair value gap. I want to see institutional order flow entry drill on this, and I want to see this wick being covered now. because um, we took a freaking Asian session high. So it might it might stop me out because we might be going to this buy side here after taking that. Or we're just creating the wick for the 15-minute candle to go lower. And sometimes it can come into the first percent of rally up and then go down to create the wick of the 15-minute. Volume imbalance. I don't like that. So once we if it doesn't stop me out, let's say we turn around here, we take this low, I will move my stop loss to here because it balanced this inefficiency. So we have nothing to do up here. Once we take this, if it's going where I want it to go. If it's going down here, it has no business coming back up here. But I would like to see this candle close below here with a gap. So this can potentially be a bearish order block. And that will be another thing that will make my stop loss be here. And don't want to see it be traded too. That's another thing that I notice about me when I'm trading. I feel more comfortable where I know there's an array that's gonna act like protection for my stop loss. You see, I don't like that it's respecting this level like that. But let's see the order block being traded to. Okay, I do not want to see it go above the main threshold of 50% if it's truly a order block. Immediate rebalance. Now it has to run. There's two confluences there. If this is an order block, I don't want to see it go above that. I need rebalance this inefficiency. So that's a willingness for price to run, and I want to see it do it fast now. Come on, baby. Come on. Come on. Yes. So now, like I said, my stop loss is going here. Also, we're trading inside of a remaining part of a inefficiency here. I want to see this act as, I don't want to see price close above this candle, because if we are in a sell program, this up close candles have to be respected. Let's check 50% of this wick. So this will be, if this is not a block, this will be a propulsion block. So price should trade from it aggressively. Okay, we trade to the open of it. Okay. And I thank God every day for the girl he sent my way. And I get stabbed out. Not too bad. Not too bad. So that will be almost 1%. Not too bad. Not too bad. Oh, I hope I don't lose you. Now the real question will be, did I move my stop loss prematurely? Or did I great did I do a great job moving my stop loss? We'll figure it out. Taking London session low. This will be something like model 2022. This pattern, we took a low, took liquidity, shifting microstructure with a fair value gap. But my model will be, we took this liquidity here. Now, do we want to trade up here to here? Do we want to do that? I think that we do. So let me get my limit order ready. Buy limit 10 micros. Stop loss will be below the first percent of fair value gap. Take profit will be up here. We are in the 950 to 1010 macro. And I thank God every day for the girl he sent my way. Hold on, this might be a breaker in another time frame. But 2 minute, 3 minute. So we have a high, a low, and now if we make a higher high, this will be the bullish breaker. Lovely, ain't it? So these two candles are my bullish breaker. Okay. I want that to be the wick of the 15-minute candle that is about to happen now. I want you to overlap this fair value gap, close above it, and use it as a catalyst to take this relatively equal highs. That will be Lovely. Or that could be institutional order flow entry drill on the 15-minute time frame. Towards the 50% of the first percent of fair value gap. Are you not entertained? Ed's gonna give it to you. See, this up here is too smooth. Too smooth. Can try to this one. But I like my low hanging fruit objective. If it doesn't happen, if it doesn't happen by 10:30, I'm not interested in it anymore. It's a little bit of speed right there. Come on, Nasdaq baby. What do you want to do? Show me. Show me. What do you want? What do you want from me? I've been pretty consistent lately. I might have to do some kind of video on the weekend, writing down the things that I've done, sharing my journal entries. Because what I want to do with this channel, it's kind of like a online journal with the things that I'm willing to make public, and also to track my progress. So there we go. I want to see more of that because I'm more of a visual person. I learn more and I understand more when I see. If we'll cross the first percent of a value gap with one bullish candle, that would be a strong signal for me that it really wants to go where I want it to go. I'll take the fib off. There's the fib. No, that's not the fib. This is the fib. I'm really content with the way that I'm rating price lately. It's um it's good to have the ability to say, hey, if it does this, then this. If it does that, then that. I like the level that I'm at in my development right now. It makes me excited to sit in front of the markets and see what's going on because I know that I can understand it. I like it's likely to do this and then see it deliver. It feels good. At first when you're new and you don't really know what's going on, it's a hassle to sit here and trying to figure it out what these candles are doing. But when you reach a certain level of understanding, it's really fun. And I really had that thought of Friday and Saturday. I can't wait for Monday. I wanna sit in front of the charts and I wanna trade. They said get you a job that you like so you don't have to feel like you're working. And for me, this is it. This is it. You sit here and you be like, if it does this, I want it to do that, and seeing it deliver, it's a feeling that you have to you have to experiment so you can understand it. There's Shotgun Saturday by ICT that I really like, and it's called Knowing That Your Model Will Deliver. And that one was one of the most important for me because you when you know your model, it's and you know it's going to deliver, it gives you confidence. And on that podcast we can call it, he talks about how not knowing your model will cause you to be impatient. And impatient is something that all traders have to overcome. And the way that you overcome impatience is knowing your model. So that's a buy right there. Stop loss under this. Take profit up here. I'll make sure that it close above it. Yes, it close above it. And stop loss is 2. So it gives you huge confidence when you know your model will deliver. And that is one thing that all people that want to speculate in these markets have to overcome: impatience. But one way to look at it, one perspective to have is when, let's say, that the most important skill for a trader is to know how to preserve capital. So if you are impatient and you take trades that you shouldn't take, it's gonna slow your progress in a sense. Like, for example, I taken this trade multiple times, right? That we trade under it, we take liquidity, then we trade above the first percent fair value gap, and we take relatively equal highs. This is likely to happen, but it cannot give it to me here. But that doesn't mean that next time it happens that I'm not gonna take it because I've seen it happen multiple times. Can it stop me out? For sure. For sure. Matter of fact, let me take my one tick below the first percent value gap. Because, oh, it did stop me out actually. But that's cool. Now, if it does the same thing again, if it trades above it, I am taking it again. But you see, my stop loss was too tight. I should have put it a little bit below this thing. Because it waked me up. And those are things that will happen and things that can happen. So let's say want to go above it again. Now, if it stopped me out again, I'm done. So yeah, there we go. And I thank God every day for the girl he sent my way. But I know that things he gives he can take away. So let's see. That's a mistake on my part. It was a mistake on my part, but it doesn't matter. In reality, it doesn't matter because knowing your model will deliver. Knowing your model will deliver. So we have this inefficiency being traded to in the 15 minute. If it goes above it and it touches the first percent of fair value gap, the top of it, I'm taking it again. I'm taking it again. Oh, I hope I don't lose you. So I was wrong. Nothing wrong with that. There's nothing wrong with that. relatively equal lows. This beautiful thing that I got. So immediately, what I think is why, what was in the charts that I didn't see, right? So usually, when there's relatively equal highs and we trade down, we fail to close the opening range gap. We trade above the first percent of fair value gap. We usually do this and trade there. But there was something in the charts that I didn't see. So immediately, it respected this fair value gap, right? It's probably the 50% of this wick, and it failed to go higher. And then we came down, shifted market struck in the 50-minute. We took this low. We took this low. And we're respecting this inefficiency. So there was a catalyst in price for price not to go up here. Or is it not the time to do it yet? Okay. Okay. So what do we got here? With respect to 50% of that. Um, Wick. Do we want to go above the first percent of fair value gap? Inversion fair value gap. If it, yes. Do we want to go above it and close above it? Do we want to do that? Come on, baby. You know you want to. You know you want to do it. Okay. Initially, I would like to see it go down a little to create a wick for the um, 15 minute. But we're trading the consequent encouragement of the first percent of fair value gap. Would it want to do a emitter rebalance? That will be cool. So it will show me that it really wants to run emitter rebalance. Trade above it. Okay. Now, is this a order flow entry drill here? Trade above it. That would be a good scenario. So there we have the institution order flow entry drill. If it doesn't overlap the whole thing. Ideally doesn't want to close the whole inefficiency. But if it does, I would like to see it run from it fast. Nope. Yes. Show me, baby. Show me. What do you want, Nasdaq? Where do you want to run, baby? This candle will have to go to the outside for me to be more comfortable taking along. Let's check the 50% of this wick here. That will be permissible. want you, I need you, oh God, please. Okay. And you will know my name is the Lord when I lay my vengeance upon thee. No! That's one of my favorite movie scenes of all time. It's such an order flow intro drill. Very short to block, potentially. Here. Just consolidating. going around. I don't like that. So how much is that? Okay, so roughly, roughly, um, let's see, only 200 of profit today. That's not too bad. Have to journal that later today. There's no news, so that there'll be also um less probability of the markets to move a lot. But that's um that's one thing about making mistakes that later after I study for 1 hour, I'm going to uh, journal my entries and write down my thoughts and all that. And I'll come back tomorrow as a better trader because you want to fix all of your things, all of the things that you have to fix about yourself before you start making money with it. You gotta be sharp, man. It's about to be 11. We have one micro from 10:50 to 11:10. We'll see what happened then. I like that. We didn't respect this um, bearish PD array. So going above it, retesting it down. That's an entry long. First partial here. Final target up here. But I require more information. Immediate rebalance there would be ideal. We try to do a little volume imbalance there. Okay, that could be institutional auto flow entry drill. Does the 15-minute want to close right after 50% of that wick? Great question. Because in the 1 minute, it does it. So, and price is fractal. So it could do it on the 15-minute too. Close above it, have a little wick, and then go up. Oh, I need you, I love you, oh God. Please stay. This beautiful thing that I got. So or it could also just melt down from here. Anything is possible. There's relatively equal lows too. Those lows, there's liquidity under it. We got 3 minutes for the macro. At 11:10, I seize any kind of interest in the market. If it's gonna give me what I want, it has to do it in the next 23 minutes, 22. And if it do gives me what I want, I'm taking a trade with half of what I traded before. Half the risk. Instead of 10 micros, will be 5 micros. Oh, I hope I don't lose you. I gotta go make me some breakfast. I'm starving. So we are in the macro time. Relatively equal lows here. So since today there's no news, I don't think the market is gonna. Dude, it was crap. So key takeaways from today. That was a good trade. Okay, this was a bad trade. Try to move my stop loss. Bad idea. Bad idea. I didn't. All right, and took me out where it was supposed to, but bad idea. It would have make my loss bigger. So where I put my stop loss, that's it. That's it. So I gotta make sure that I put it at a place where if I put it there, I'm wrong, and this is what this was where I put it initially. So the thought of moving my stop loss, not good. Here, the setup, boom, didn't happen. We'll be here again tomorrow. No biggie. So sell side down here. So yeah, today was a shitty day. There was no news. So should have lowered my expectations. But those are all things that I'm gonna journal, learn from it, and it will make me a better trader. So tomorrow when I sit down again here, I'll be a better trader than I was today. And that's the goal with this. It's the goal with this account that before I start trading with real money or funded account money, make sure that I'm proficient and that I know how to use my strategy. Trade it just as I would a normal account, a regular account with money. So that's the goal, and this is where the mistakes are allowed to be made. Where in a safe environment where I'm not risking capital. So there was some things that to learn from today, and yeah, tomorrow I'll be here again, and if we have optimal conditions, buttons will be pushed. If not, I'm just gonna stand still. But yeah, I'll see you guys tomorrow.